Okay, let's explore this depletion problem. Now, I'll read the problem that you see right here. It says Colorado Mining paid $588,000 to acquire a mine with 42,000 tons of coal reserves. The following statements model reflects Colorado Mining's financial condition just prior to purchasing the coal reserves. And the company extracted 22,050 tons of coal in year one and 18,900 tons in year two. So let's tackle A, B1, and B2. Okay, so A says compute the depletion charge. So all we really have to do is figure out what's the cost, right? The cost of the mine was 588,000, right? So if I enter that in there, you should be able to see that. Okay, now I made the font a little bit bigger, changed the columns a little bit so it's easier to see. So the cost of the mine is 588,000, and the expected coal reserves or total units expected is going to be 42,000 tons. This is up 42,000. Okay, and I probably should say in tons here. So if we're going to compute the depletion charge per unit, we would simply take the 588,000 and divide it by the 42,000. I'm letting Excel do the hard work here, so we don't have to do the math. And we come up with $14. Let me format that. So that's $14 per unit. Okay, next we want to calculate the depletion amount for year one. So what we've got to do is list what was the year one units mined or extracted. We're using the word extracted. So the year one units extracted was 22,050. If I copy all of this down here, change unit one to unit two. Unit two extracted was, what does it say? Oh, I didn't show it. Oh, no, here it's 22,050 for year one, 18,900. 18,900 for year two. So if we then want to calculate depletion, year one, I'll copy that down and then just change that to year two. Then what we're going to do is multiply that $14 rate. I'm just going to hit F4 to lock it in so I can copy this in a minute, times the 22,050. And there's my depletion amount. Now this is in dollars, so let's put it in dollars. We don't need cents. So let me eliminate the cents. No, gotta make this column a little bit bigger. Then eliminate that cents. I went the wrong way with the decimal places. Now I can copy that down. Okay, we've got the formatted solution. 308, 700, and 264, 600. So that's how you calculate the depletion. Okay, now I'm going to handle B2, and I'm going to put that starting information that was provided in this problem for you. Okay, so we've got this, accounting equation model, right? Assets equal liabilities plus stockholders' equity. It's the expanded version. So we want to follow through the transactions. And the first one they've given to us. So they're essentially telling us this company has 758,400 cash, all in common stock. And now we need to record these various transactions. So the first transaction we're going to record is the acquisition of the mine. So they paid 588,000 in cash. That will decrease cash by 588,000, but that will increase an asset which they're calling, or we're calling, coal reserves. Okay, my fans in the background really are excited about coal reserves. We'll have to excuse them. Okay, next we've got to record that depletion for year one. Well, how do we do that? Well, we already calculated at $308,700. So the coal reserves would go down by $308,700. And that results in depletion expense, which of course is an expense that will reduce net income, right? Revenues less expenses equals net income, and net income is a component of retained earnings. So we see it showing up here on the balance sheet or on the accounting equation. And by the way, when we purchased the cost of the mine, that was an investment activity. That's what that IA stands for. Remember that increases and decreases to long-term assets are treated as investment activities on the statement of cash flow. All right, so what about year two? Well, year two, we should see the same entry, only in the amount of $2,064,600. Okay, and that's this problem, everyone. I hope you found that helpful.